Investing money can seem daunting, especially if you're new to the world of finance. However, with the right knowledge and strategies, you can make your money work for you and potentially grow your wealth over time. In this episode, we'll explore smart ways to get started with investing, ensuring you make informed decisions that align with your financial goals. Understand your investment goals. Before diving into the world of investing, it's crucial to understand your goals. Are you investing for retirement, buying a home, or building an emergency fund? Your investment strategy will vary based on your objectives. For instance, if you're investing for a short-term goal, you might prioritize low-risk investments, while long-term goals might allow for more aggressive strategies. Start with a solid financial foundation. Before you start investing, ensure you have an emergency fund. This should cover 3 to 6 months of expenses. Minimal high-interest debt. Pay off debts like credit card balances to avoid paying more in interest than you could earn from investments. Understand the different types of investments. There are various investment options available. Stocks. These represent ownership in a company. They can offer high returns but come with higher risk. Bonds. These are essentially loans you give to companies or the government in exchange for periodic interest payments, plus the return of the bond's face value when it matures. Mutual funds. These pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. Real estate. Investing in property, whether residential or commercial. Certificates of deposit, CDs, offered by banks with a fixed interest rate over a specified period. Diversify your portfolio. Don't put all your eggs in one basket. Diversifying your investments across different asset classes can help spread risk. If one investment performs poorly, others might perform well, balancing out potential losses. Consider the power of compound interest. Albert Einstein famously called compound interest the eighth wonder of the world. It's the principle where the interest you earn on your investment starts earning interest itself. Over time, this can lead to exponential growth, especially if you reinvest dividends or interest. Choose the right investment platform. There are numerous platforms where you can start investing. Robo-advisors. These platforms use algorithms to offer investment advice and manage your portfolio, often for a lower fee than traditional advisors. Online brokerages, platforms like eTrade or Robinhood, allow you to buy and sell investments. Traditional financial advisors, for those who prefer a more hands-on approach and personalized advice. Stay informed. The world of investing is dynamic. Stay updated with market news, trends, and economic indicators. This knowledge will help you make informed decisions and adjust your strategy as needed. Avoid emotional investing. It's easy to get swayed by market fluctuations and make impulsive decisions. However, it's essential to stay calm and stick to your investment strategy. Remember, investing is a long-term game. Regularly review and adjust your portfolio. As you age, your risk tolerance and investment goals might change. Regularly reviewing your portfolio ensures it aligns with your current financial situation and goals. Start small and stay consistent. You don't need a large sum to start investing. Thanks to micro-investing apps and fractional shares, you can begin with a small amount. The key is consistency. Regularly contribute to your investments, and over time, even small amounts can grow significantly. Investing is a journey, not a destination. It requires patience, knowledge, and a willingness to learn. By following the strategies outlined above, you can navigate the investment landscape with confidence and work towards achieving your financial goals. Remember, the best time to start investing was yesterday. The next best time is now. Understand the role of fees. Every investment comes with associated fees, whether they're transaction fees, management fees, or fund expenses. It's essential to be aware of these costs as they can eat into your returns over time. Look for low-cost index funds or ETFs and consider platforms that offer fee-free trades. Invest in what you know. Warren Buffett, one of the world's most successful investors, often advises investing in what you understand. If you're passionate about technology, consider tech stocks or funds. If you're a real estate enthusiast, property investments might be your forte. By investing in areas you're familiar with, you can make more informed decisions. Taxes can significantly impact your investment returns. Understand the difference between tax-advantaged accounts like IRAs or 401(k)s and taxable accounts. Utilize tax-efficient strategies such as tax loss harvesting to minimize your tax liability. Stay clear of get-rich-quick schemes. The Invest